the discussion will be about these banks and then their integration. Not only banks, but also the payment companies' integration to the crypto world. So we have very distinguished panelists here. Let me introduce themselves. Sofian from NextPay, Edgars from Magnetiq Bank, and Tim from LetNoPay. It is better to introduce yourself, guys.
I'll go first. Hi everybody, my name is Sofian. I'm CEO of NextPay, a banking provider that's been catering to crypto businesses since 2019, so since quite the early days when it was officially possible. And I'm really happy to be here and talk a bit more about what we're doing in Baltics and in Latvia in particular.
Hello everyone, my name is... Can you hear me? Okay. My name is Edgars Valmers. I'm member of the board at Magnetiq Bank. So like a few words, 15 years in experience in banking sphere. Main focus is fintech and e-commerce and crypto. Yes, so basically glad to be here. So I have a good opponents for discussion. So yeah, I hope we will enjoy it.
And I'm Tim Ferland from LetNoPay. LetNoPay is a integrated payment gateway solution for merchants who work online, who want to receive payments from their customers in crypto and have that converted into fiat for them so they can retrieve their funds and use it for other operational purposes. We've been working with high-risk industries and online e-commerce companies, and we've been working on this for about 5 years now.
Thanks for the introductions. Let's start by looking at the bigger picture, Like, here's my first question covering all the main topics, actually. How do Latvian banks or payment companies currently view the integration of cryptocurrency and blockchain technology into traditional financial systems? And that goes first, Edgars. I think it's to start with you.
It's a good question. In short words, yes, we are looking forward to integrate it. But first of all, we are a bank, so basically we need to take a look on regulation. Yeah, so basically it's European regulation, and especially regulations that comes from Latvia's banka. Yeah, I'm pretty sure that it will take some time. Yeah, but I'm pretty sure that my colleagues will be on one step forward because they have much more experience. And I think Latvian banks surely will integrate it and will use it. But when we will receive some kind of instruction from local government, yeah, because we are really affected from them.
We're looking forward to Latvian banks providing that kind of services, but I think I would divide this into two parts, because one thing is the technology itself and blockchain and usage of blockchain for internal ledgers, for intra-settlements, and we see a lot of cases abroad with, for example, Ripple being utilized between banks for settlements and so on. And I think when it comes to local banks, there will be more willingness to use the technology for its own development, for some internal processes, for building the internal ledger, for storing data and so on. And as a second iteration, we will see more of a crypto-related services that will come afterwards when the technology is mastered by internal processes. And here I think it's very important to distinguish two things when we speak about the internal services for clients. And I think Edgars would probably agree with me that the first thing would be to actually start working with clients who are dealing with cryptocurrencies, give it private individuals or companies to start providing the services banks can provide right now. So opening bank accounts for them, clearing their payments and supporting the fiat activity. And the next step would be when the banks would actually offer crypto custody, when they would offer sales and purchase of digital assets and go full crypto native. But I think those three steps are sort of sequential, and then we can't jump over one of the first one in order to get to the third one. And I would fully agree, it very much depends on the regulator locally, but there's been quite some willingness that we see from the Latvian bank, and hope it can happen.
Thank you, Tim.
Just very quickly, we're already seeing the Latvian central bank accept crypto as a new option. They've changed legislation so that the Latvian central bank will allow companies to possibly use crypto for their share capital, for individuals and companies to pay their taxes and state fees. So these are all movements that are already happening in Latvia. So we see Latvia as trying to become more of a leader than a follower in this particular industry.
Exactly, I agree with you. Thank you for those insights. And to follow up, are there any specific regulatory challenges or opportunities in general? You know, like if Latvia stand out in the European banking and crypto landscape, yes, they're a leader. I can say that. But what are the challenges as well? You know, for you guys, for the regulatory perspective, to implement these services.
I would say from bank perspective, yeah, I think once again my colleagues will share more information. And yeah, you have mentioned a good point that from the start, bank should be not afraid to cooperate with such type of clients. Yeah, because we still see that local banks are afraid to accept such clients and they are not willing to understand this business. Yeah, and from this point of view, challenges from bank's perspective, it's to understand actually how it's working. And the second, it's to comply with the local rules, yeah, local legislation and renewable legislation. Yeah, because sometimes it's really hard. Sometimes it's really hard to find a right employee who have some kind of knowledge about the crypto. Yeah, because if we will take a look on some, I don't know, magazines, Delphi, Demet, or whatever, only related information with crypto is crypto scam, crypto scam, crypto scam. But by the fact we see that crypto actually is working, it's helping. Yes, I think we need to change this paradigm of crypto because nowadays we see only some kind of negative information about the crypto. Thanks to our Baltic, yes, they're pushing this NFT, TEM and crypto. Yeah, I think in news we should have more positive information about the crypto, not about only scammers.
I mean, it's easy to speak about the bad things. They're good clickbaiters and it's easy, but I fully agree. And the crypto awareness, it's very important, and it's not only going to reach the regulator, but also it's going to help the adoption altogether. But one of the challenges I would like to mention is a follow-up from Edgars and a competence from a regulatory perspective as well. Not only that banks would be equipped well enough with employees who have proper competence, but if your regulator doesn't follow the suit and doesn't really know how does it work, what's the technology, what kind of risk mitigation measures you have to use, then it's going to be a very difficult conversation with them. Luckily, I have seen from Bank of Latvia that they actually have gotten quite a lot of knowledge in that part, and that makes me very hopeful.
Yeah, just basically to sum it all up, risk appetite comes from the top down. Banks and financial institutions don't create their own risk appetites. They mitigate what they want to do in eye of the regulations that the regulators put in force. So as the governments and central banks begin to accept crypto and expect it to grow and be used in the industries, then everything else will fall into line.
To follow up this question then, do you think the potential for new revenue streams outweighs the risks? You're not sure about it.
Well, I can maybe tell from our perspective. There is an analogy I could share with you. One of the reasons we've applied and acquired an EMI license in Lithuania, which we're using for banking crypto companies, was because we had major issues with our other crypto businesses and them being basically enemies of local banks. So we have few big banks here that start with S. I'm not going to disclose the name of it, but you may guess. And that was quite a trouble. So we tried to fix our own issue by banking ourselves, but it turned out also that we got so many peers from the industry. And it obviously brought risks. It brought risks from a regulatory perspective. We've been scrutinized, I think, much more than other financial institutions, just because we want to be pioneers. And we wanted to do it before you had quite a lot of PSPs and EMIs that want to be crypto friendly. What are the other risks for banks to get step into that? I think there's plenty. That's going to be a careful process, but the reward I think is there as well. And being a pioneer, it obviously allows you to cover a bigger market share. And I think it's very important, and I think that's going to be probably opening a completely different question, but if we will look at what's going to be next year, in 2 years, post-MiCA environment, where it's not going to be only the crypto companies that are crypto. Once we get rid of the gray zone in Europe, which is every member state has its own regulations, there is no unification of the law, that's when non-crypto native companies will come into the play. When you will have regular shops, you will have regular service providers who will be like, hold on, I can now accept payments in crypto, and that's actually fine because there is regulation that supports that. Hold on, I can hold Bitcoin on my balance sheet, and that's legal. So I think there's going to be a lot of reward out there for those who are pioneers and are able to build the use cases for maybe those companies or individuals that don't have so much experience in the field.
Thank you, Sofian. And then, if there's regulation, there's compliance. What do you think about this? Biggest concerns about banks, about compliance for this crypto, infrastructure. Do you think are you ready for this one?
I will comment from business perspective. From my point of view, cooperating with crypto, blockchain, or whatever, from the bank side, we have a much more information if you compare it with the standard payments like a SEPA, Target, SWIFT, or whatever. And from my point of view, by using some external tools, we're not going to name it, but by using some external tools, we are receiving so huge information about like a source of funds, because 1 week ago we had a case when customer came to us and said like, listen, 5 years ago or 7 I have mined X amount of Bitcoin, please transfer this money to my private account. And we have used a tool, and we understood and we received information about each penny, about each block of this transaction. If customer would go to us like with fiat, I don't know, euro, dollar, or whatever, so we would mock him with thousands of questions like, please provide this document, please provide this document. So basically we took his cold wallet, we took his blockchain, and by clicking one button we received the whole information. But once again, of course crypto is like a high-risk business, but if we will take a look how much information we can receive by using some blockchain tools, for me it's like impressive, because all the time we see that crypto is high risk, we can't understand why it's coming, blah blah blah. But anyway, we see that currently even some blockchain tools cooperating with police, Interpol, etc., etc. I think it's good, because from bank, of course it's like a more information for us, and it's taking a less time to provide some kind of decision on some deal.
It's the beauty of blockchain.
I will add to that on the compliance side. There is a big thing coming up for everybody who's using crypto, and is using some crypto services in Europe. For many crypto users, after the 1st of January, where local companies will be forced to do something like travel rule, for example, where similarly to SWIFT, the banks and institutions are going to have to transfer a massive amount of information about who is sending digital assets and who is receiving them. So if after the regulations kick in, we are supposed to receive a payment in crypto, we need to know the address, we need to know the name, we need to know the surname, we need to know date of birth. There's a lot of details that have to be disclosed, and that's not something that crypto enthusiasts are used to, right? But that's what law technically requires us to do, and it's very problematic. And I think that compliance part is going to be very difficult to get used to, especially that it works against many principles of Bitcoin, of anonymity, of not really sharing everything.
Exactly, I agree with you. We'll see what happens, especially for the crypto users. Okay, these are the great points, and then they really point a vivid picture of the challenges ahead. But let's shift gears a bit, In terms of infrastructure, what do Latvian banks need to develop or adopt in order to safely integrate cryptocurrency services into their existing systems? Do you have any plans on that?
From a crypto company perspective, we can help guide banks. We already know what it takes to build something, to make it work with crypto, to integrate it with APIs, and we can work with banks. It comes down to like when you're building a car and you need parts, you can either build it or buy it. So there's going to be white label solutions that are available for banks to be able to accept crypto and process it, or they can hire their own internal blockchain teams to build those and maintain those.
Do you have any plans to serve as...
I will have a small talk with Tim regarding their services.
Okay.
Maybe we will buy some. But you see, for us, it's kind of a bit easy because we started to cooperate with crypto merchants like 3 years ago. So basically, we have implemented several tools. We're using some external tools for blockchain analyzer. Also, we have specialized experts in this sphere. So basically, we have additional education. I think it's like a main point. First one is software. It's a basic blockchain analyzer to see the sources, Bitcoin or whatever. And the second one is your employees. Because if employee know how this crypto working in general, like P2P markets in crypto sphere, some NFT, we will have a less question to the merchant. I think it's like two main points.
I would like to imagine a situation where local banks are offering custody, exchange of digital assets. And I think that calls for a lot of technology, because to build a proper custody, it either takes a lot of time. There's a lot of good custodians on the market naturally, but not all of them are, in line with the local requirements. So custody, obviously blockchain monitoring tools, very important for compliance. There's plenty of good solutions. Further, access to liquidity as well. Because what banks are very strong at currently is accessing liquidity in terms of fiat. And there is the biggest advantage of banks against EMIs and smaller companies is actually that liquidity and possibility to offer products connected with lending and things like that, which obviously amasses liquidity. So that's something that the banks will have to figure out in terms of crypto as well when the time comes. But I think that is coming as a third iteration when the crypto services are really here, and I don't think that's going to be happening in a year or two. I think that can take a lot longer, end of the day.
Yeah. You said the right thing, because I think this process will take at least like 2 years. And currently, for example, we're not planning to be competitors with blockchain technologies or crypto. So basically our main idea to be like a home of fintech and crypto. Yes, that's why we're focusing to provide such services for crypto merchants. But the good idea is that it will take at least, I think, maybe 2 or 3 years to understand, first of all, how MiCA will affect on this whole situation and whole business, and actually what Latvian banks and European banks will do. So they will choose to be competitors of those all companies, or they will help them to sell and provide more services for the customers.
Yeah, we see that there's going to be more collaboration than competition. I think that you might see some mergers of different companies, different EMIs or banks connecting with large-scale exchanges or payment gateways, and resolving that solution just by simple collaboration.
There's MiCA in the one hand, and on the other hand, there are some, CBDC talks. I would like to ask about these, central bank digital currencies. How do Latvian banks perceive the development of CBDCs, and especially in relation to cryptocurrencies?
It's almost all question to the banks. I would say that currently I don't see any good signs that this project will be launched. So basically currently it's a bit passive, if I can use this word. So as we will receive more information from European Bank, Central Bank, or from Latvia's bank, we will take a look for sure. But currently it's not my main focus. Regarding MiCA, of course, for banks it will be much easier, because nowadays when we're receiving application from crypto merchants, all the time we need to mock him with a question, license, legal opinion, tools, etc. So basically, when MiCA will be implemented, for banks it will be much easier. So the second point is how Europe will use this MiCA. Because we had a lot of experience in this sphere when governments starting to regulate some kind of type of business, and sometimes it takes some time to be convenient for each person. Because I think Sofian will have much more commentaries about the MiCA. But once again, for banks it will be much easier. If customer is going under MiCA, okay, we already approved. But I think there will be much more, let's say, underwater things to face during this MiCA.
And a very quick comment from my side. Anybody who's looking or who's using European providers, just be on the lookout whether or not they will be here in 6 months, because what MiCA brings as a requirement for virtual asset service providers, it's really massive. It's so much on what basically EMIs and banks should be like. Corporate governance, risk mitigation, all the policies, everything that has to be in place together with some capital requirements, and that can cause a cleansing, I think, in Europe when it comes to crypto companies. If we look at local markets, just in Baltic states, we have probably a bit over 1,000 virtual asset service providers, majority in Lithuania, and some in Latvia, and some remainings in Estonia. And my estimation is that out of the 1,000, maybe we'll have 60, 70 left. So there will be a big shakedown in the market, which then, as a turnout, it will make it more concentrated, but it will make it also regulated, which will be easier for banks to work with them. It will be easier for VASPs to work with banks, because then they will have access, everything will be pretty clear. But yes, it's turning into centralization, and that regulation means centralization, which once again is a bit against the principles of crypto altogether, if you ask me. But I don't see a possibility for real mass adoption without this centralization that is much needed. Because all of us here in this room, we will be like, no, we don't need regulation, we're happy with the crypto as it is. But if you go outside and you look at all Riga and Latvia in general, without proper rules, all these faults won't be going to cryptos, and I think that rules are needed, because otherwise I wouldn't be able to convince my mom that buy this, buy Bitcoin. She's like, but what is the rules? Where's the bank that is selling it? Before that happens, it's going to be difficult for that mass adoption, which I hope MiCA will help with, at least locally.
Yeah, you're a crypto player. Please go ahead.
Well, in general, yes, MiCA is very complicated. It's going to be very expensive for most of the companies. It's going to be very difficult. We've already had several what we call cullings of the herd through Estonia, Lithuania, and other countries where the regulators have just ramped up the regulatory fields and the cost to the companies tenfold. So we've seen, as Sofian said, a reduction of the amount of cryptocurrency companies in these countries, and we expect that it's going to drop even more with MiCA. But as far as the central bank's digital currencies, it seems more of an anti-competitive move than anything else. In MiCA, they've already dictated that certain stablecoins will not be allowed to be used in Europe. So if somebody has...
Like USDT?
USDT, ERC20, or TRC20 is out the door. So they're saying there's specific rules that will be required. So a stablecoin has to be issued by a company who holds a banking license or an EMI license in Europe. So none of the current ones, except for USDC, is accepted at the moment. And so this is, a move towards centralizing the compliance and the AML rules, but it's also a bit anti-competitive to suggest putting out a digital currency that you would then be the only one in the market with a stablecoin.
And then on the contrary, I read recently that we have about 5 euro-pegged stablecoins released already or approved. So we're going to have Euro C, there is Euro M, there is Euro S that is coming up. I think there's one in Finland that some guys are creating. So I think on one hand, yes, it's sort of tightening, but that regulatory framework will provide opportunity for those stable coins. They're not CBDCs, but sort of privately issued stable coins, but I think that will bring in some variety into the market, because now everybody's going around USDT, USDC and so on, but the attention hopefully will also shift to something more Euro-pegged, and I see a bit of a chance in that, to be honest.
For global companies, you can't have just a euro-pegged stablecoin that's available to you. You need to be able to provide different access to different currencies like USD, perhaps the Japanese yen. Maybe one day there'll be a stable Japanese yen coin. I don't know. But I agree with you that there are ones out there, but what we need from the central bank and from MiCA in general is we need more specifics, because there's a lot of vague language in the system right now. They still haven't worked through all the rules for DORA, which is the first step in MiCA, which is the electronic and information security and cybersecurity parts of this system, these new legislations.
Thank you to our panelists for those in-depth answers, actually. And now